Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly, and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on EMKR because I'm an expert in naval navigation because I have a boat. And you know, boats are cool.
Well, that's fantastic. A really smart decision, young man. We can put that checked and it's gone.
Hey everybody, welcome to the stream. How are you, Dane?
Hey, how's it going, Johnny?
Going good. Boats, you like boats, right?
Oh, that's the best, man. Nothing like spending all my money on a boat.
Yeah. EMKR, I think we maybe have time to pull it up today, but it went down a lot on Friday.
Yeah, I think they're just kind of in a rough spot. It looks like I have to dig in honestly more, but I know the past few quarters have been kind of ugly for them. So, and I'm pretty sure they're relatively levered. I think they're. I know they diluted their share count recently, so I'm sure it's a mix of all those kind of things.
If I remember correctly, we have pulled them up recently in a stream, and I saw also GLT had a double in a day this week. Did you see that?
I did. I looked at GLT. I've been in GLT at times, and of course, this time they happened to decide to sell an asset. So
yeah,
or they spun off an asset, I should say. But yeah,
it's of course hard to predict, but we have talked about that too. So if anything, it's good to see that things happen in the companies that we tend to deal in a bit, you know.
Yeah, I mean, you can tell these are volatile companies, and when there is good news, the price reacts accordingly. So yeah, I mean, that's why a lot of these, narrative driven, I find.
Yeah,
even considering value.
Yeah. I see. I just want to thank everyone for, last Saturday we had a celebration video for having 69 subscribers, and now we have 81. So thank you for everyone who has subscribed. And then I see Max again in the comment saying hi, Dane.
Hey, what's up, Max? How you doing today?
Subscribe. And so good to see people are watching in. That's what we want. That's the purpose here. So just feel free to use the chat. And as always, we will try our best to start the conversation and see where we are going. Dane, by the way, I saw your stream on Thursday. I thought it was high quality stuff that you went into there, and I really like that you used their own points against them, because it's, well, maybe not everyone dig deep into the things that like you did there, but when you have someone pointing it out to you, it really made sense, at least to me. And of course, we have a view in this, and we are on the side that wants the opt-out model, of course. But for me, still, I'm trying to put myself in the other camp, and it's hard to find good arguments, in my opinion.
Yeah, I think some people had pointed out some options and why opting in would be worthwhile for students. And just from my basic understandings of economics, I could see why the opt-out model is very successful and why it actually does relay information or just better prices for the students. So I wanted to dig in and just basically see, well, what are they saying? What are they presenting to the Department of Education in terms of why that their reasoning and why the law should be changed in the first place? And it only took a few clicks when I'm reading through, and I'm like, wait a second, this is agreeing with what we're saying, not at all what they're saying. So um, I just think it's probably it shows the lack of yeah, it makes me wonder what their ulterior motives are. And I mean, you can start to see in the comments and stuff, I really start to question Sparks' point and why they're pushing for all this. I think there's a lot of self-interest in what they're saying. And I actually think they're trying to pull, like the wool over the sheep's, and just try and kind of sneak like a fast one in here and take a huge chunk of the market is potentially what they could do here.
Yeah.
And it's in their direct interest to ban we were talking about the merger between Cengage and McGraw-Hill that got beat not that long ago. And, they make it out like it was this like moral ground on why that merger didn't get through, and really didn't go through because the court was going to force him to sell off a bunch of assets, and it wouldn't have been a good deal for either company. So that's why that merger didn't go through. And if you look at the most recent comments on BNED, from some of us who are talking about possibly seeing a merger or whatever kind of an acquisition with BNED. And it's really a different kind of merger. The companies, if Cengage was to merge with BNED, they're not really the same kind of companies, which is where you could argue that there was a conflict of interest or an antitrust type deal with those two companies. It doesn't seem to fit the picture with BNED. So it's interesting points. I think it adds a lot of more value in different ways for the company. And obviously, none of this stuff's sure. And I'm sure you've heard me say it again. I never like to base a thesis on the fact that I think someone could be acquired. I'm not saying it can't be. I just, it can only be part of my thesis because there's so many times stuff doesn't go through for so many different reasons.
Yeah.
So
that's impossible to predict, or like I don't think I will go in with that as the only thing as the thesis. But in the comments, I'm sure we're gonna point it out today also. But underneath the most recent article from Courage, I find some good discussions there now, and people are laying out a few different options that may happen here. And of course, again, hard to predict, but it's nice to see like there are options here. And you and I have been talking also off the stream that even with a opt-in model, it's not necessarily completely done,
Yeah, no, definitely.
So yeah. I saw Max had a question. He's asking, in the daily movers you go for plus minus 7% and 10%, and your universe is the S&P 500, and Nasdaq 100 and Russell 2000.
I mean, mine's the entire database. Anything, it can be stuff that's over the counter too. I try to pull in around 8,000 stocks into my database, because once they start to get past that 8,000, I start to find but it's kind of stuff that's not really applicable. And there's a lot of like funds and stuff like that I don't need to pull that data in for. So I just kind of set my number around 8,000. But yeah, it's a mix of all those, obviously, but plus some of the over counter stuff that doesn't necessarily trade on one of the major exchanges. So I thought I would do that because, even if stuff goes bankrupt, it's not necessarily something that you can't look at, and I've joked around and said that some of those really pop. So, I like to just have them in my database just in case that there's something I might see. I do have a hard time finding conviction in some of those to actually invest in them, but it's not to say never. So
Yeah, and I have the same. I have it as a plus minus 7%. I think you use 10. Is that correct, Dane? In the daily movers?
Yeah. Yep. Daily movers and my weekly movers, everything's plus or minus 10%, which
Yeah.
just kind of helps to keep the numbers down. So I'm not just because if I feel like if I did less percent, I know you said you edit out like the biotext and stuff, right?
Yeah. Yeah, I
Yeah,
filter them out,
I keep that
all of
stuff
them.
in, so I could pull in a lot of companies if I'm not careful.
Yeah. And for my universe, I'm using the same as you said. And Y sheets is a bit different because when you search them up in the fundamental, you get access to every exchange they have. So I can pull in everything just automatically via the add-on from Y sheets. But in the daily mover sheet, I pull them on in from the same stuff that you just said. So yeah.
Yeah.
I hope that answers your question, Max. He's also asking, and do you have some additional filters? Because when I look for all US stocks, I often find stocks with minus 99% in a day. So do you have like a minimum market cap or something? For me personally, like I said, I filter out the biopharma. And I used like a lot of filters to try to get all of them away, but it still pulls in some. But that I did it because I found it that they flooded the daily movers a bit, and I'm not so interested in them right now in my the style I'm using right now. And what was the other one? And yeah, I have a minimum market cap, I think, on 10 million. Do you use a filter for the market cap, Dane?
Yeah, I actually I have a few criteria. I just pulled up mine just so I could tell you exactly what it is, Max. My criteria for market cap is it won't go below 20 million. That's where I'm not saying there's never a company below 20 million, but like that's usually already pretty low for me. So stuff that tends to go under that, I'm gonna have a hard time. I just think if you're under 20 million, it's hard to really keep justifying the purpose of being public, just because of the actual fees that it costs to stay public. So my daily change, like we said, is 10%. I usually look for stuff that keeps a volume at least over 20,000 shares, because there's some stuff that trades and it would only be like a few shares, and it also kind of ramps out the exact opposite stuff that's like super high price that has that's worth like thousands of dollars and only like 100 or 1,000 shares move a day. I kind of block that out. And my last one's just the actual price. I try to keep stuff that if it starts to drop under 25 cents, I tend to block those out too. So yeah, every once in a while, maybe I miss something, but in general, I would find that those parameters kind of sift out the stuff that moves like 99% or something crazy. Or the other ones where it's like, it's like it gained 10,000% in, an hour, because like those are all just nonsense to me.
Yeah. And if you're
I don't need to look at them.
if you're trying to build out some similar stuff, Max, I in my experience, I find like I added things as I went and used it. I saw that, oh, I need to get rid of this, I need to add this. So I think the best way to figure out what kind of filters you want is just to start using it and try to clean it up. So it fits your style the best way it can.
Yeah, no, that's a good point. Just over time, as you keep doing it, you'll kind of like slowly tune your screener to get it more accurate in the kind of companies that you're looking at, without having just like an extra 100 companies that you're just gonna be able to skip right over because they're not gonna matter to you.
Yeah, because it's a very important part of the process right now, and we have talked about it in past. Like, it needs to be effective because we go through so much in a week. So I know both of us has like alert systems that if we have looked at them before and stuff like that, and we keep the notes and update them as we go. But that process, in my opinion, needs to be very effective. Otherwise, you will spend too much time on maybe stuff you have already done just 2 weeks ago that you can't really remember.
Right. Yeah, it's more afterwards too. That, just like you're saying, just keeping track of stuff, because once you've looked at something, you don't want it to get lost in the mix. Especially if it's something that interested you.
Yeah. But keep us updated, Max, if you are building out these things. We will. I love that you use the chat and ask questions. So yeah, keep us updated on how it goes. All right, should we move into the? You want to go through the dashboard today, Dane, or just go straight
Yeah,
to the
I
fundamentals?
got whatever you want to go over, man. We can. I
All
actually
right.
haven't looked at the dash from
No,
yesterday,
let's
so
start in the dash then. Um, I was a bit busy this week, so I didn't really get to update myself on Thursday and Friday. But have you seen something that has moved this week that have caught your eye, Dane?
well, just the same same stuff that always moves up. Nvidia can't seem to find a ceiling.
Yeah,
Um, just if you look at just the chart for Nvidia, it's just ridiculous.
yeah, it
And
is.
I feel like such an idiot too, because I looked at it right around like $100, and I was
All
like,
right.
I don't know. I'm like, I don't know if there's any short-term catalyst. And then literally like in the next like few months, they started talking AI, and it's just like this never-ending, bull cycle up here.
Yeah.
Um, but
And I saw Bitcoin has had a move up again. I'm still I still not own it, but I just find it fascinating to just see where it goes because it's at 47,000 right now, I think.
yeah, Bitcoin's another one of those ones that my big thing with Bitcoin is if you look at like a 1 year chart for Bitcoin, it looks awesome. It looks super bullish.
Yeah,
Constantly is like gapping up. But and it always seems to break through like any part of resistance. But when Bitcoin drops, it always drops like spectacularly.
yeah,
It does this awesome climb, and then when it does, it goes almost all the way back down. It never seems to drop all the way back down, but it does take huge losses.
yeah,
So it's tough. It's tough to justify, and then on the way down, it's tough to find a spot where you think it's going to land on. So
yeah,
I like to watch it from the sidelines as always, just because it's well, if Bitcoin to me is anything, it's a great experiment with psychology.
yeah, yeah, true. I saw some comments because I read a little bit about on some forums, and they were like, "Oh no, mainstream media are talking about Bitcoin again. Time to sell."
Yeah, right.
Yeah,
Yeah, that might be your best bet.
yeah. Nah, it's just gonna be interesting. I see on the chart it's getting a bit overbought now, which it hasn't done too many times since 21 in my chart.
Yeah, let me look at a longer term chart because
I'm
I have
looking
them.
at the weekly.
I actually just pulled up MicroStrategy too because I feel like they're always in that mix with Bitcoin. But yeah, you're right. I mean, but even when it reaches oversold territory, it can stay in oversold territory for quite some time, and it's had pretty bullish runs in oversold too.
Yeah, yeah,
So,
yeah. It's a tricky chart to interpret, right?
but I mean,
I saw.
like I said,
I was thinking maybe not to go through ALTO again, but Justin had some updates on Twitter, and he was also speaking about the crush margins and natural gas was down and stuff like that. Did you see that tweet?
yeah, I did actually. I saw his last one, and I'm just pulling up Alto so I can try and see some quotes here. But yeah, I mean, uh, natural gas. He said below $1.90 now here, and first two. He said in February 2023, the crush margin to peak and range from -29 to -36. He's like, now it's positive 3 cents. So I mean,
Yeah,
we're talking almost a 40-cent swing. So I mean that is a huge swing. I feel like that number is underrepresented of what that means.
yeah. I saw. we can go through it now. I was thinking maybe to end the stream just going through it, but now that I have it up here, I saw this tweet from Justin on 7th of February. It's a bit long. I'm just gonna. His point was a bit strong here, that he was asking management to like stop worrying about hurting people's feeling and try to work for the investors and unlock value. You know.
Yeah,
So
I mean,
it
it's
was
a
a bit
shareholders
clear the
company.
stance. Sorry.
I said it is a shareholder company, so I mean,
Yeah,
it's
yeah, yeah.
management's job to work with all of us who are owners.
Yeah. He's writing like ALTO management and board of directors need to rip the band-aid off and stop worrying about hurting people's feeling. They need to be more vocal and let it be known. And he's 100% right, of course. That's the entire thing here. But
Right.
still, they haven't. And I saw just some people here in the comments was like asking him if he had made that point known to management. I'm thinking like, show some respect for the guy. Like of course he has done that. He's the biggest shareholder. He is constantly talking with them, and if you have tuned into his Q&As and everything, you will have a picture that he's doing like a decent job here with putting some pressure on them, I think. So
Yeah, I mean, if you even scroll down in the comments a little bit, someone comments and says they don't seem like the guys that would read Twitter. Hope you're telling them
yeah,
this directly. And he says
yeah.
they 100% know where Domo, their largest shareholder, stands.
Yeah, and I'm thinking like, of course they know. So it's just like, I guess that's what you get on social media.
Right.
But a lot of people are frustrated here, right? Myself included.
Yeah. Yeah, just management's ability to drop the ball time after time is disappointing. Especially when it looks like we're in almost a period of like a really good catalyst to finally turn things around.
Yeah, and he's also saying that he will write a new article after the Q4 numbers. Yeah, it's going to be
When are the
exciting.
Q4 numbers?
Huh?
When's Q4?
I think it's early in March, actually.
Yeah, it looks like March is for a lot of companies I'm looking at right
Yeah.
now.
Yeah. No, so it's interesting to follow this. Like we are getting close to the Q4, and after that, it's the next near term is in the summer, right? Where they have kind of promised to have something solid for the carbon sequestration project. So yeah, exciting times, and the share price it has gone up a little bit, but it's still below $2.
Right. Yeah, no, I mean, this is once again an interesting price territory. I mean, I saw it was up on Friday, which I mean doesn't really mean much, but uh, it starts to seem like we're finding a floor again in terms of where this might hold up at.
Yeah. All right.
So we'll see.
Yeah, we will see. But interesting things too. It's getting close to the date, so you want to start with BNED a little bit? You have some new stuff to say there, or?
Only on BNED. I just been talking with some of the other guys, and like I said, we've gotten more deeply into the possibility of acquisitions or mergers. And they're specifically talking more on Cengage's side. Man, this thing we're up to 198 comments right now.
Yeah.
So
I
this is
saw almost
real time.
200.
Yeah, I'm just seeing what was said since I've last looked because they're still going back and forth talking about but let me just find the one comment because the one comment kind of paints the picture of where this conversation got started and to see where it would go from there. Let's see here. So private investor said given the covenant amendments, there are 4 options in his opinion. First is in order for them to get the specific liquidity transaction that they were talking about, which involves issuing the preferred common stock, which would delever the balance sheet. Obviously, the nice thing about having preferred shares is if you have a poor quarter in your or even during the 2 quarters where you're not going to generate a ton of revenue from the textbooks, that you wouldn't have to worry about paying interest rates during those times, because it would instead be that you'd have to pay a dividend out. But the dividend for preferred holders would obviously be during the better quarters, and then in the 2 weaker quarters, that debt would be lowered. So the debt, instead of being all just actual debt, would be part debt, part preferred. And then, like I was saying, during the good quarters, you would pay the preferred shares their dividend, and then in the other quarters, you wouldn't have to worry about the debt killing your free cash flow as you're trying to make it through those 2 quarters. He said, secondly, if someone's going to buy preferred stock, it might lead them to conclude that you might want to sell the whole business, especially right now where the actual common shares are cheap. And he said that's expressed at a timeline in the covenant, because I think it was April 15th, it states, is the deadline for when they could actually do that. If you see annex 3, he says, paragraph 4 from their report. And then lastly, third is they could extend the maturity of the debt later. But he said that's already been done a couple times. And because it's going to generate pretty amounts of free cash flow before December 28th, they might actually have a chance to work with their ABL facility to push that back further. I believe it's Bank of America who actually is in control of that. And then obviously last worst case example is they could throw it in a Chapter 11 that they can't find buying, or get the Bank of America to extend again on their side. So I find that very unlikely, just because most companies don't, or most funders don't want to see something go into true bankruptcy. It ends up destroying a lot of value, and they'd rather kind of kick the can down the road than do that, which is what he
Yeah.
says. But more likely, what they're pointing out is whether and they say, like, they brought in Steve Parangos, or how you say his name, and he's a specialist with Apollo Capital, basically working on making sure that these things can be adjusted and that they can restructure these things. He's done it for, I think, like 10 different companies, and he did something really similar with Cengage, which is right in the same kind of field. So it would be strange that he just did this for Cengage, who's been successful with it and actually is valued much higher than BNED, even though to me it looks like a much worse outlook for them. They brought him in right at the same time that they ended up pushing the debt back, and now we're looking into the future on what we're going to do. He seems like kind of the right guy that would actually be able to handle this and unlock this value in that way. So we'll see. But it just makes sense to me, if they're going to bring someone like that in, that they're probably considering all these alternative options.
Yeah. And I saw in the end here, like a little bit further down, Courage was asking, I think, private investor and BLCM what they thought about the Fanatic link that he has talked about in the comment. And they were a bit like, they didn't see the perfect match really there, but then I think Courage made some good points about it would still be attractive for them and to get this as a pure asset and keep it alive, because they invested when this price was much higher than it is now, right?
Yeah, well, to your point there, BLCM, he brought up a good comment, because with Fanatics, what he was thinking is that, or I think Private was saying that, Fanatics is really here for the contract and being able to sell goods, because I don't know how it works over by you guys, but it's really popular in the States to have like if your school's got like a big sports, if you're a big sports school, you sell all the memorabilia through your bookstore. So Fanatics, being a company that constantly has sports logos on all their stuff, they're able to kind of get the rights to be able to sell that exclusively through the bookstore. So obviously that's the huge deal for Fanatics and Lids. But he brought up the fact that what if BNED split itself up by selling its merchandising contract rights to Fanatics and its vendor agreement rights to Cengage? That would generate a ton of money, probably, because those merchandising contracts are probably worth a lot to Fanatics and Lids, and the actual vendor agreements, which is more Cengage's wheelhouse, that would be a lot of value to them. So if they did some kind of split with a company to those, I could picture that being worth a lot for shareholders.
Yeah.
So
So there's a lot of like, of course, maybe nothing of this happens, but it's also it's not impossible that one thing of these that they are pointing out there will happen in the end. So I just think it's nice to. It's. I think if you want to invest in BNED, you should read through all this conversation here, and it's really valuable.
yeah, and my last comment here was talking about that I could picture this merger just because it's kind of a different merger, like I was saying before, going possibly through because it's less like an antitrust issue. But someone had commented saying Nicole Allen, brings up a bunch of points on why something like this would never happen. But I quickly kind of disagree. And I keep getting back to the point I wrote. Ironically, your team is proposing an entirely OER model that would control the entire library of content, yet they never explain how they're going to pay for this, and most likely they charge a flat fee for students, essentially creating their own monopoly. And her organization Spark would continue to receive grants and taxpayer dollars to fund this OER change, and then they could still charge students. So
Yeah.
it greatly benefits her to have something like this happen. And BLCM goes on to comment that Spark automatically collects fees from students via their tuition. So exactly what they're arguing that we shouldn't be able to do, they're doing, and they have a bunch of universities that are allowing this, which he lists and provides a link. Other words, Spark claims that preventing publishers from getting paid by student tuition will make colleges more affordable. Yet Spark itself also increases the cost to students through fees automatically paid to Spark from the student's tuition and without the student's consent. So, and then he goes on and says that, George Soros is in here, which, I'm not sure exactly what George would necessarily have to gain from this. But he is one of the donors to Spark and always is pushing for this open society type roles. And George Soros is a smart guy. Obviously, he's here to make money, and that's always his focus. So, he said turning his perspective, if you combine this with the knowledge that Spark wants to write the own textbooks that students learn from, it kind of makes you realize what Spark's agenda is clear. They're going to be the ones who control what the textbooks are. They're going to control what the students get to learn from on those textbooks, and they get to control the way that you purchase and receive the information from those textbooks. All that seems like a huge conflict of interest to me. It seems like a way that they're trying to actually monopolize the entire market. They were arguing that when Cengage and McGraw-Hill was going to combine, it would create a duopoly between them and Pearson, because Pearson's the other large textbook type distributor to colleges. And both of those would have about 40% of the market, leading to over 80% of the market being controlled by two companies, which is part of the reason why they started telling them you had to sell off assets so they wouldn't have that much control. But you're talking about a way that no company can compete with your model because it would all be digital, which they also argue the digital model, is the reason why they're trying to do this, because they're trying to make money. But they would have a complete digital monopoly on this, where they also get to write the textbooks and control what information is coming through.
Yeah.
So I don't know if he's hinting that, maybe there's some kind of like conspiracy in that way, but either way, I just think as Private brings up, I like how he says this. He says, bottom line is BNED is a sexy asset to a lot of people, and they're going to get sold. And if they're going to get sold, a lot of people would want to integrate this thing. It's going to be interesting to see. Outerbridge has a major stake in it and is fighting for the equity. So there's always going to be an argument there to unlock the most value for equity after paying debt. And it's in its best interest to get the deal that unlocks the most value for us shareholders. So I think, like you said, with Fanatics and Lids, with Outerbridge being here, I just think there's a lot of different ways you can unlock value in this company. And right now, with its price being so depressed, this one could be a multi-bagger when it finally goes through.
Yeah. Yeah. And this it quickly went from 100 to 200 comments. So this conversation is ongoing, and we are all waiting for the transcripts to be published. And on the website, it just says coming soon. So yeah, I guess we will see them closer to March.
Yeah, and was it, I think it was Private was talking to me on Twitter, and he was saying that he had tuned into him. He had responded early enough that he was able to tune into them and actually watch them live. And like I said, his big takeaway is that they were not in consensus. So
Yeah,
it's really important that if you're worried about this big change with the Department of Education, they have to be in consensus. So if they're not in consensus, it could, number one, stall when the actual uh, decision is made. And there's a good chance that we're not going to end up changing the law drastically if they can't gain consensus. Because without consensus, they're not going to be able to change these things. They have to find it. That's the way that like the NAGRAG rules work here in the States. And it's, there's an argue if it's even like a good way to go through and do these things, because if they don't come to a conclusion amongst themselves or all the people who are considered part of the negotiations, then nothing will change. So there's a chance that this goes way out, and if this doesn't go through and they're able to continue the FDC programs during this time, which will continue to generate the free cash flow that we're all expecting, and all the contracts are actually growing with schools, they're going to generate more free cash flow this next year, which will put
yeah,
them in even better position, which means the chance of them getting this actually restructured and getting their bank, changed, the chances of it go up because they're going to be able to keep cleaning up the balance sheet during this time.
yeah. And I hope to see in the next transcript or the next draft, rather than in that document, that there's a bit more clarity in the language and the changes they have made, because the first one was very confusing. And
Yeah.
I think
I'm very curious
reading
to
that.
see how they rewrite it.
Oh, we have a alert, Dale. Did you see it?
I just did. Yeah, there we go.
Nice. Thank you.
Thank you,
Thank
whoever's
you, whoever that
subscribing.
was.
Always appreciate it, guys.
Uh, yeah. Anyways, if you read the transcript, the big one, they were all confused, right?
Yeah, well, I can't remember the guy who was the one who was supposed to be running. His name was Greg something.
Greg,
Um,
yeah,
Yeah, when he started bringing up points, everyone's like, I didn't even think that's what the whole point of this like hearing was on. They kept saying like, you're talking about all these like outside factors, and it sounds more like the issue comes down to transparency and making sure that students are getting a cheaper deal than they could else find in the market. And that really is the goal of the program. That's the whole point of why this law was put in place in the first place. So
yeah,
I'm in full agreement with that. I think these companies, regardless of how much free cash flow I want them to generate, if they can do it, and they can do it where the students are benefiting, and they're benefiting from the way that they're making it a more efficient system, then everybody's a winner. We got cheaper stuff for students. We're going to continue to have great literature provided for secondary education, and there's a few companies that are doing this in the benefit of those students, and they're the ones who are going to end up coming out making money doing it, because
yeah,
they're providing it in a more efficient way than the schools themselves could have found on their own. This
yeah,
is why stuff tends to conglomerate, and this is why if you think about it, if a school is trying to run a bookstore all on their own, they have to have all these things in place to run it. Where if you hire Barnes and Nobles to run your bookstore, they just act as the conduit through your bookstore, and you don't have to deal with all the stuff that they now have to deal with, but they're doing it on such a large scale that they know how to do it. And when they come into another school, they just flick the switch because they've already done it 1,000 times before.
yeah, yeah. I just brought up, this is a bit old. It's from 2021, but it's from Nicole Allen, and she was. I think it was a bit funny because they were writing in this. Following the style of our original Q&A and 1 year follow-up, we will ask a set of key questions and offer answers. So they ask the questions and the answers. So that's good.
Right. At this point, I think everything that she says, or even Spark for that matter, I don't necessarily just put it all on her. But
No.
you can tell what her agenda is, and her whole organization doesn't exist. Her whole career and livelihood doesn't exist unless she keeps pushing for this.
Yeah.
This is This is where she's gotten her federal grants from. So if this narrative all of a sudden falls apart for her that she's trying to make up, then she loses everything essentially and has to go back to the drawing board for her entire career. So
Yeah.
I see what she has to lose and why she would fight so hard for this. And she would try and convince everyone that this is the only way going forward. But like I said, my biggest issue, and this is the point I will always point out, is they constantly say textbooks have gotten more expensive, but they fail to present any information from after that this change was made. Everything's from before then. Everything is the price of textbooks from 2004 or 2013. The law was changed in 2016. So she hasn't presented a single argument, in my point of view, showing that textbooks have actually gotten more expensive. They actually have
Yeah.
went down, which everything agrees with.
I think she wrote that same argument here in this document from 2021, and if I feel like she's just using the same thing now. But the point I had here was I just highlighted it, and it's not a big point, but in this period she was very worried about the digital content and the data that it collects from students. And I haven't, maybe I have missed it, but I haven't seen she worry too much about that in this case. Have you?
Well, no, because the ironic thing is by her saying that, her whole OER model is the fact it would be all digital, except they would be the ones in control of it.
Yeah, that's why I
So,
brought it up. Because,
yeah, that's what I'm saying. It's she constantly contradicts herself.
yeah. Yeah, it's a bit weird. It's a bit weird. But
Yeah,
anyways,
I didn't think I would delve into this one as deep as I have, but the
no.
more I find, the more it feels to confirm my biases, which you can argue they're a bias, but I'm just really waiting for the opposition to present for me an argument that really truly makes sense to me, and I keep not being able to find it.
Yeah. I see Max has a question again.
Mhm.
In one of your streams, you mentioned that Carl Icahn is invested in a stock, and as I understood, you saw that as a positive. But I now found a track of history performance, and it's not that good.
For Carl
I think I
Icahn?
remember that stream, and Carl Icahn is just a big name that for me, I pay attention to if he's involved. It gets a bit more interesting. And no, he hasn't always been successful, and I think especially in recent times. Do you have an update on that, Dane?
Well, Carl Icahn, if you look up his actual history, he is one of the most successful hostile type takeovers when it comes to his style of investing.
Yeah,
He will go into companies and kind of rip them apart and make sure that he can extract as much value out of the companies. Most people kind of fear him actually, and most
yeah,
companies will do everything from poison pills to whatnot to not get him on the board, because if he comes on your board, things are going to change. He is not going to sit. If that guy thinks he finds value in your company and he's going to try and extract it, he'll do anything to make sure he's right.
yeah.
So, yeah, I'm sure he's had some failures in the past, but he is a self-made billionaire. So he is extremely successful at what he does.
Very
So,
successful,
anytime
and
I see Carl Icahn's name, you have to weigh it pretty heavily.
yeah. And he's very tough. He has that reputation that Dane is talking about, and I think we mentioned it also in that stream. But there's a nice, in my opinion, nice documentary on him and how he got to the point where he is today. I think it's on HBO. I really like that documentary,
I
and
remember you commenting
you
on
got
that.
a
Yeah, I still got to watch that.
yeah. You get an impression of how tough he is in those board meetings, and straight to the point, right? And he just wants to go in and get the value and fix, like, kind of fix it in the way that he see it should be fixed. So yeah, that's why we were talking about him when we saw it. I don't remember the ticker, but I remember the stream.
Yeah.
And there's a few people that you will probably hear us mention again and again that we like if they are involved. He is one of them. Max is saying he has minus 50% in the last 10 years.
Okay, but Max, one thing is the most important part to point out is Hindenburg wrote a negative short report about him. What was that, like 3 or 4 months ago?
Yeah, it's not that long ago.
And so he has a track record of just murdering it. So that 50% drop was when that Hindenburg short, and I'm not saying they're not possibly right. I didn't read that short report, so I don't know how accurate it was or not, but the stock took a real whap after they put that short report out. But you have to remember Hindenburg writes short reports and they're short the company. So it's to their direct gain to prove their points. But I don't discount Hindenburg research because they have pointed out a lot of frauds and or things that are kind of overly stated in their reports. So I don't know. I didn't look into the report. They were arguing. I'm pretty sure that Icon had flated a lot of his assets in his company, basically overstating it in terms of how much stuff's worth. So yeah, I don't know. But that's most recently why he's taken the hit. But like I said, this is someone who's risen from the bottom to become a billionaire. So we just you have to take him relatively serious and try and figure out when he's on a board what's his goal and what's his purpose. He can be both good and also like maybe intimidatingly bad if you're looking for a certain outcome. If you're, so if you're going to buy into a stock with Icon involved, just know he's involved because it does matter.
Yeah, it's just a thing to note down and keep in mind and use as your use in your research thesis and or to create a thesis. I think the ticker was Xerox, probably, right, Dane? Do you remember?
It could have been Xerox because he was involved in Xerox. Didn't he sell out recently?
Yeah, I think that was we saw he was in, and then we found an article saying that he sold out in November or something. And I think that wasn't very successful for him. I think so. Yeah, he doesn't always get it right.
Yeah, he's not always. I mean, he's an investor. He puts his head out there and takes on risk. But yeah, I mean, he is very successful. So he it's not like he doesn't know what he's talking about.
Yeah. All right, should we go into some different names?
Yeah, let me know which one you want to pull up, and I'll start going through with you.
I have NSYS as the next one. That's a tiny one.
All right, I just want to make sure I can pull up the.
Nortec Systems.
Well, I'm trying to see it so I can pull up your screen to make sure I'm trying to zoom in, and instead it's just speeding up the video.
Yeah. It says Nortec System operates as an electronic manufacturing service company. The firm offers a full range of value-added engineering, technical, and manufacturing services and support including project management, designing, testing, prototyping, manufacturing, supply chain management, and post-market services. Its manufacturing and engineering services include complete medical devices, printed circuit board assemblies, wire and cable assemblies, and complex higher-level electromechanical assemblies. The firm serves the aerospace and defense, industrial and commercial and medical markets. I think we have seen this before in a stream.
Yeah, I'm not sure. I don't actually have it in my database, so it's a new one for me.
Okay. Tiny market cap, 30 million. It trades at 11 right now, 11.12, and that's pretty spot on the book value.
Yeah, it only has 3 million shares outstanding, so low share count.
Low share count and has been steady also in my data set. It generated this year some operating cash flow and free cash flow. And it doesn't show up as safe, but it doesn't issue shares in my sheet. So I think they have good control of the debt situation. And
yeah, it looks like
earnings.
they have. It looks like they've been kind of paying it down. I don't know if that's actually debt, but their actual liabilities are paid down right now.
Yeah. Insiders own 55%, so I'm just going to check what that is about here. It looks like it's a family company.
Yeah, I want to pull up and see what that debt is.
There's some lease stuff.
Yeah, it looks like they have a line of credit, but other than that, it looks like it's just leases, really.
Yeah.
So they do have a pretty safe balance sheet.
Yeah, I think
They have that
I
line of
think
credit till 2026.
huh?
I said they have their line of credit till the June 15th of 2026.
Okay, yeah. But I saw the reason I was thinking we should pull them up was this recent year. You see, in the past years they have been a little bit more negative, but they've had a solid year this year, it seems like. And then, of course, the question will be, what do you think they will do in the future, like with everything else? But it's a bit tiny market cap here. But it's a family-owned company, then I think.
Yeah, they just says they appointed a new financial chief on December 5th. I'm gonna just
Yeah, I
look
saw that.
quickly at their last earnings call transcript and just see if I can pull anything out of that real quick. All right.
There was very little. There was almost nothing on Seeking Alpha. The last one is from 2016.
Yeah, that's why I'm going in just to the transcript to see if I can just read something that's possibly going well for him. Where are they headquartered out of?
Maple Grove, MN. Where is that?
Minnesota, maybe?
Yeah.
Yeah.
Oh, by the way, Dane, I forgot to mention this, but I saw in your stream, there was a guy blaming Europe for something. I didn't like it.
Yeah, I think I remember talking about that. I was gonna say,
Yeah.
I don't know. Don't go right after Europe, man.
I I noted down the name and yeah. What a guy.
You damn Europeans' fault.
That's it's too easy to blame it on us.
It's the nice thing about America and Europe. We can pretty much find a bunch of things to blame ourselves both on.
Yeah.
We can pretty much take credit for a lot of the stuff that's wrong in the world.
Yeah. No, but I see the steady share count, and still they have revenue growth, slowly but still, and also the book value and the equity growth is going up. So I'm a bit interesting to see maybe where this is, where this is heading. But I think for me it needs to prove itself a bit more, given that the market cap is so small. But you know, on the historical average on the earnings, they have $1 in my sheet.
In
And they seem to have
earnings,
control of the debt.
yeah, around $1 is what I got. A
Yeah.
little bit lower on a long-term look, on a 7-year
Yeah.
look, but what was I gonna say? It looks like this last year they're kind of starting to gain back their turnover. Looks like they're trying to get inventory back down.
Okay. Are you in the
That's
transcript
one of the
now?
things I noticed they're talking about. It looks like it says that they're starting to increase their revenues, and the revenue performance was driven by growth in our medical category, while our industrial and aerospace and defense categories remained relatively consistent. So it looks like they're kind of expanding more in the medical market. They say it's up by about 10% as compared to the first 9 months of 2022, with the majority of the increase coming from medical component products. For the year to date, the industrial category was 29 million, which was unchanged. Aerospace and defense totaled 14.5, which is just down slightly. So just really looks like they're medical areas where they're really starting to see some benefits.
Yeah, and I think that market is in China. It seems like.
Yeah, it says that they have a large, I don't know if it's a facility or what it is, but they have part of their company or businesses in China. So
Yeah.
it looks like they're slowly starting to spend a little bit more on R&D, so maybe that will benefit them going forward with some new products and whatnot, you know?
Yeah. Yeah, I'm a little bit tempted to just throw them into the tracker just to keep an eye on the development here.
Yeah, this is one that not many people are looking at, but that doesn't mean they're not starting to slowly turn things around here.
Yeah. But it needs more time. And I see also on the, on the chart since October, like many other things, it's up from like around 750. So I would need it a bit cheaper, which is maybe a bit dangerous to say when the market cap is so low, but right now it's
Well,
at the
that's why I
book
say,
value.
I don't tend to look at stuff under 20, but
Yeah.
I'm not gonna say never, because
No.
market cap is just kind of like that's just what the stock price is doing right now,
Yeah.
and they are improving book, so
Yeah, they are. And it's a pretty big jump on the last 2 years, on the revenue side.
yeah. So if they can continue to meaningfully grow in on the medical side,
Yeah, this would
it's
be a bit
definitely a little
interesting.
expensive for me here, but
Yeah.
it is
I,
somewhat interesting.
yeah, I think I will throw it into the tracker. Maybe I have it already. I don't know. No. Do you want to say more on that one, or should we go just continue?
It's up to you. I think I'm good right now. Just from kind of what I got from it. Like I said, I would need a little bit more for me to gain much more confidence in it, but it's interesting nonetheless.
Yeah.
I don't know their product lines, like super well or anything like that. So
I'm just quickly writing in some stuff here.
same. Well, how low did it get on the chart?
Huh?
I was just looking at the chart to see how low it had gotten.
Like in October, it was 740. 740.
It has really taken off though since like even
Yeah.
around like COVID times. Like it's the actual company itself has done pretty well since like around 2020, 2021. It was anywhere from like 250 to $5.
Yeah.
And now it's creeped up into, I mean, the highest I've seen it getting is like 16, 17. So
Yeah.
it's had some
And
pretty
you
good
see like
days.
around the range between 9 and 11, that's kind of where it has been a bit stable, I guess you can say.
Yeah. Yeah, it looks like a pretty stable business up until just kind of around COVID. It looks like stuff's really bounced around then. So I imagine it's a lot of contract type things too.
Yeah. Um,
But yeah, if they can keep up the free cash flow like they had this year, I mean this was their best year yet, or last year I should say.
yeah. Yeah, and that's what I like. That's why I keep it in the tracker, because if they can prove again that they can copy this year or even improve of it, and you see some development in the contracts they get and stuff like that, this get a. Also, we say that it's risky that the market cap is low, but also you can get the big winners in this space, right?
Yeah, no, I agree.
All right.
I'm actually surprised no one's talking or commenting on this
Yeah,
one.
that was the other thing. Like it was really all the last article from 2016, and
Oh,
no
you know
comments on
why
it.
though? I'm just looking now. It's probably because the volume is so low. The average volume for these guys are 2,500 shares.
Yeah, I saw on the chart that they had some crazy volume spikes a couple of places, but other than that, it's very low.
Yeah, so I think this is one that just not a lot of people are looking at.
Yeah, which is interesting also, right? In a positive way.
Yeah, oh, I'm not necessarily going to shy away just because something's not getting looked at. So if something's not getting looked at, there's probably a good reason to look at it.
Yeah. There's some comments on the Yahoo that are a bit. Fred is saying the CFO probably got caught doing meth. That's valuable insight, right?
Definitely, I definitely love to go on the Yahoo comments. They're gonna provide some DD that you're not gonna find anywhere else.
Yeah. All right. Anyways,
All right, what do you got next?
CRC. And we have a new question from Max. What do you think about the ticker SSP? It's a news company that acquired a company from Berkshire some years ago. They got a lot of debt. We can pull it up. I think SSP. I think I've looked at them.
Yeah, I'll pull them up before I do CRC. Is that cool?
Yeah, they are actually my tracker.
Yeah, I've looked at them before. Scripps Company.
Oh, but we have them already in the list for today.
Oh yeah, they're like
Yeah.
my third one to look at. So yeah, we
Yeah.
can definitely go through it. We'll go through it now, anyways, because
Yeah.
we were gonna pull them up anyways.
You want to do CRC first?
It's up to you.
We can jump to SSP since he was asking.
Yeah, let's do it for him.
Yeah.
All right, let me just adjust this because they are pretty levered. So I just want to make sure I get a fair valuation here.
Yeah.
Obviously, revenues are doing well.
Yeah, solid revenues, and share count has decreased since 21, almost 10 million.
Book value's kind of been taking a whack though.
Yeah.
I mean, there's a lot of debt. That's the issue here is so we gotta start to figure out what's going on and why is the income this last year so terrible?
They also have a dividend. Oh yeah, that was very terrible.
Yeah, dividend's gone now.
Yeah. Oh, has they stopped it?
It looks like it stopped on mine.
Yeah, okay, they probably have then. I'm trying to check the bonds now if they have it. Yeah, they have some. It's due like a bit far out though. They have two in 31, 29, 27. The most recent is 25.
It looks like I'm just reading one of the news articles on Seeking. It says media mogul Byron Allen is evaluating a bid for several TV stations from Scripps. Apparently, the company owned by the TV producer is looking for financing from private lenders on Wednesday, which people cited familiar. Allen may be looking for about $200 million. Says they eyeing are not in major TV markets, and the talks are preliminary. According to the report, latest media on the media mogul comes after a Bloomberg report that in September, Allen had made a $10 billion offer to Walt Disney to purchase ABC television networks, local stations, as well as FX and National Geographic cable channels. Allen, who also owns the Weather Channel, was reportedly one of the bidders for BET Media Group, which also owns VH1 and BET cable networks. The Wall Street Journal reported in August that Paramount abandoned a plan to sell a majority stake in BET. Standard General outbid Allen in 2022 for a 5.4 billion attempted acquisition of TV broadcaster Tegna, a deal that was never consummated earlier this year after the Standard General failed to win approval. So it sounds like there's a lot of stuff that they're trying to buy, but it doesn't work out very often. So it's probably some of these assets are probably locked pretty tightly in some of these companies.
Yeah. Do you see the big acquisition in 21? Which seems like it was debt financed.
Yeah, it sounds like that's probably how they do things. And that's probably why the revenues jumped that year. But
Yeah.
how did actual margins do since then? They've kind of been down, haven't they?
Yeah.
Return for investors has gone up and a cash flow EBIT compared to like turnover has actually gone up. But they did. Is that when they took on a lot of debt? Yeah, that's when they took on a lot of debt to help fund that. So I don't know. Maybe it would be worthwhile for them to try and unlever by selling off some of their other assets. I guess
Yeah.
we'd have to see what these guys want to buy and what would be worth selling. What would actually benefit them.
I saw on the single years the margins has taken a big hit. Almost all of
And
them.
Great Television, which is another one I have pulled up along with Sinclair, I guess it has outperformed them. So that might be why they've been kind of delivering, a lower um, overall market share. I don't know. This is a tough one because I feel like local media stations and all this is a lot of a dying market. You know what I mean?
Yeah, and what I have found, like in the past almost a year now, these companies, they every now and then they a lot of them comes into the daily movers, and they tend to look very similar. A lot of them, debt heavy. They are struggling.
Yeah, they're just trying to keep kind of floating above by holding the assets themselves.
Yeah,
But that it says that they bought from Berkshire Ion Media for the 2.65 billion. So that's the one that you see in 2020.
yeah,
So that's what they bought was Ion,
okay.
but like you said, I kind of wonder how much these assets are worth.
Have you seen the chart?
I have not. Let me pull it up. It's usually one of the last things I always look at.
Since 1st of February, it's down substantially.
Yeah.
always got down to 5.
Yeah, it looks like it found a bottom here just above 550, but it's just tough with the leverage. Trying to figure out. Did you
Yeah.
figure out what all that debt was? What it actually is?
No, I didn't. I just saw they they have a lot of the things on Finra.
Oh, they have preferred shares. Yeah, they do.
I saw Cove Street Capital. I know that name. Have you heard about them?
Maybe. Let me see what. Let me just take a look at them real quick so I can
Or
refresh
maybe
my
I'm
brain here.
mixing up with something, but they are involved.
Yeah, they have a substantial. That's one of their larger holdings.
Yeah, and they added recently, I think. But they have owned since 2016.
I mean, they definitely own some of the names that make me think kind of value, and it looks like they kind of tend to go with stuff that's pretty levered. Like they got VSAT, Six Flags,
Yeah.
so not totally out of our realm.
No, on their website it says classic value, small cap value investment strategies that capitalize on inefficiencies in public markets.
Yeah, no, I mean they're definitely value. So they see something in these names.
Yeah.
Which even Buffett, having the position in Paramount, it makes me think that a lot of these guys are just looking that, we have a lot of conglomeration going on with all the streaming services and this whole style of owning TV networks is kind of dying. And I think what all these guys are thinking, because if you heard Warren Buffett talk about Paramount, he specifically says he's like it's not a great business. So it makes me think that he's not holding it because he thinks there's going to be a ton of cash flow generation with it, but he's thinking of selling off all those assets and what all those things are worth. They own all these movies and TV shows that at some point are going to get bought. You know,
Yeah. Max is saying they say also in some Seeking Alpha articles that the market is dying because of many streaming companies. Yeah, I guess that's a bit hard for them. Yeah, and last heavy insider buying was 2022, but they didn't sell anything. We can check the insiders
yeah,
here now.
I just don't picture much to turn this around. I think as this gets really cheap, it becomes interesting every time it gets cheap because if it ever spins off or sells assets or possibly merges, um, if you can get in at a really good price on this, it's you could possibly get an attractive bid. That's what I see when I look at this.
Yeah. I like I said, I have them in the tracker already, so I've obviously found them a bit interesting. But what I was saying a bit earlier also, I find it a bit hard to like pick between these ones because they are a bit similar in my opinion.
No, they are, and they all carry a decent amount of debt, so
Yeah.
I don't know. I worry that the actual value of these, like if you look at like their book value versus their tangible book value, like we're arguing that these are worth a ton for like the brand names and the thing like the channels themselves, but how much those are actually worth, I don't know. Like you could see a lot of this getting eaten up by goodwill.
Yeah.
So
What do you think about that big acquisition, and then you see book value is down a bit after that, and revenue is a bit flat, but also the share count has also declined. So, what do you think about that?
yeah, but I just wonder how much is Ion worth? Was Ion worth $2.4 billion to you?
It's a big one.
I just like, I don't know if you have any kind of channels or any idea of what that's like, but like it's just kind of like basic TV. Like it's not something I'm watching much or I'm not saying there's not things on there like, news networks and stuff like that that might be worth something, but I don't know. I have a hard time wondering how much they're going to generate from these kind of things.
Yeah.
And now that there's preferred shareholders in front of the common, like you're never going to see a dividend again with this company because the dividends are always going to go to the preferred shareholders.
Yeah. And it's a bit worrisome, the 2023 earnings, because that's way down.
Yeah. I picture this one to be a lot cheaper before I get interested, to be
Yeah,
honest.
I agree. I
I'm not,
see it's
I do think there's some worth here in the assets, but it's kind of hard for me to argue what those assets are actually worth.
yeah. They are now 17% from the 52-week low, which was 485, and I think it would even have to be cheaper than that for me to potentially go in here.
Yeah, honestly, I find this interesting around like maybe like $3.50, $4.
Yeah. I was
You know,
also gonna say like
and that's honestly what I think it could be valued at. So this is high to me. I think I don't know. Even if I'm trying to adjust my leverage counter. Yeah, I still think I couldn't even get interested until this got down to like $4.
Yeah, and if you look again at the chart, it looks a bit ugly now. It's going to be interesting to see if it breaks below the 52-week low, 485. So that's something, Max, if you are tracking this, to pay attention to, like, where is this going next? Because I think you maybe you get the opportunity that this will actually end up much cheaper than today. But I didn't
Yeah,
see some
I
news
think
there.
if things continue, it's going to continue downwards, and then I think there's going to be a certain time where the opportunity arises because it would be better off just to sell the company.
Yeah. Did you see why the recent drop was?
I'm sure it's just because of these earnings. It's
Earnings?
terrible.
Yeah. I just didn't see anything on Seeking Alpha, but probably earnings, yeah.
Yeah, I'm just saying, it's, I don't think many people are trying to like buy this right now, thinking like this is like a great business. This is
No.
like, what are we going to get for whatever's left over from this business?
Yeah. And I didn't really like the big drop also in the margins. But I mean, um, it's in the tracker. I'm paying attention to it.
Yeah, I have it as mine, but like I said, I don't have a ton of confidence. It's starting to drop here.
Yeah. Thanks, Max, for. We had actually planned to pull it up anyways, but thanks for giving us some tickers.
Yeah, no, it's definitely an interesting one.
Yeah. All right, you want to go to CRC?
Yeah, we can do CRC now.
I think CRC was a bit on the expensive side, if I remember correctly right now.
Gotcha.
And it's also close to the highs. And it seems like something happened in the pandemic year here, because the data I get before and after is very different.
All right, here I'm just pulling this back up now. Yeah, I kind of have a similar marking here in terms of they generated nothing. Were they shut down?
Yeah, that's what I'm trying to figure it out. But there's some articles here
Sounds
on
like
this
they
one.
probably weren't able to run.
And
They are
there's
building
some
up a cash position.
there's some talk about like carbon capture opportunity, so it's a bit, you know.
They're paying. Are they doing it? Do they have a buyback programs? It looks like the share count's dropping pretty quick too, and they're paying a hefty dividend.
Yeah, they started with a. I think. Did you see the? My data is a bit messed on the averages because of the 21 numbers, because they.
Yeah,
have
I mean,
very
I get
high
fair value
earnings.
around like $45.
Sorry.
I said I get fair value around like 45. So
Yeah. Yeah. It shows up as safe in mine.
yeah, I mean, they have a lot of cash compared to debt, so they're not in a terrible position.
No.
See if anybody's talking about it.
The future of oil is in California.
Oh, and are they going to go through a merger?
Uh, no, I read this before the stream. They acquired Area Energy.
Gotcha. Yeah, I mean, you can see that the market reacted positively to that news.
Yeah. There's some talk about Bry in the comments on that one.
Says pro forma estimated 2024 free cash flow is expecting to more than double to 685 at current strip pricing and total nearly 3 billion through 2018 or 28.
Yeah. But a big acquisition though.
And their the board authorized a 23% increase to the company's stock buyback program to 1.35 billion.
Yeah.
This looks like a
Even
pretty good yeah, and tomorrow BRY.
yeah. Even if this is a bit on the expensive side, it has some interesting stuff going on.
No, it looks pretty well run, and I think the metrics actually would probably state that it's worth even more than this if it wasn't for COVID here.
Yeah. And it's a bit interesting because I see, not that this is a big deal or anything, but there's almost a 9% short interest in this one.
Which is strange. I wonder why.
Yeah, that's why I said it, because that seems a bit high to me in this company.
Oh, interesting. They were spun off from Oxy.
This one?
Yeah, and they pretty much due to the fact that California is like a challenging regulatory environment, so they didn't think they would be able to succeed.
All right.
So it might be that it's actually probably great um plots of land for oil, and maybe it was just the nervousness around them not being able to continue to operate there that made it become an opportunity.
Yeah. And I see some comments also about, again, the carbon capture thing they have going on here. Like this guy is saying, however, zero mention of carbon teravolt is a huge miss. So I would have to read more into that and the potential there for the, what do you call it when the government pay you a little bit of money to go a bit more green?
ESG.
Yeah.
Yeah, it looks like they could definitely get the benefits from that, and they're talking about the fact that, you know, they're gonna continue to need natural gas, and, these are one of the guys that actually could continue doing that. Um Yeah, California is kind of interesting because, you know, I feel like they went so heavily in the one direction of trying to eliminate, carbon and everything like that, and, now I'm wondering if they'll pull back because it's been, tough to push it as quickly as they had hoped in, California.
Yeah. Now there are things here that I like, but I'm not sure if it's gonna be in my tracker. But that share buyback program is that's good.
Yeah, I would imagine people shorting it, it's due to the fact that there's definitely risk in being in California, regulatory wise.
Yeah, but still like 9%, it's a bit high.
Yeah, but, I mean, if you're right, this goes to 0.
Yeah. And the chart looks a bit looks a bit scary up there, right?
Yeah. Guess I'll just put a comment for, you know, California and regulatory risk.
Oh, sorry, Max, I missed your comments earlier. On the SSP one, he was saying about 560 is technical strong support since 2011. If we break that, we got a lot room to the south. And thank you for pulling the ticker up. I am happy that I found a stock that you guys also found this week. Yeah, nice. We saw some of the same things.
Yeah, I mean, he brings up a good point. I agree with what he says on the chart. So we'll see. I mean, we'll see. It's just a good thing to mark if it continues to break down through there, then we'll have to find probably a new support.
Yeah. And right now it's not. It's heading maybe to a bit more oversold territory also, which I guess then it can break down below there. Anyways,
Right.
jumping a bit back and forth there. Yeah, what do you think, Dane, with this CRC thing?
I like it. I think it's fairly valued, which is the only major issue I see. And due
Yeah,
to the regulatory risk, I would need a larger margin of safety. Not because I don't think the business is decent, and you know they could obviously acquire more and continue to grow, but you know it's kind of the same reason I don't really invest in like China because I don't want to get screwed at one point and lose everything in one swoop.
yeah. There's been some selling in the past also from some big funds here, I see. Because I noticed they only have it like 1% of insider ownership, which is that small.
Yeah, I see. Aries Management was involved, and I followed them for CCO for a long time,
Yeah,
and they're also in FYBR fiber,
yeah,
and they're out of this one, so they
yeah.
obviously think that the risk is there.
But saying that though, they sold in the 43 and it now is at 52, so yeah. You wanna move on?
Yeah, no, I'm ready to keep going.
I think I'm down to your the tickers you pull up. Then you have any preference of which one to start with?
No, it doesn't matter to me. I got the same list as you got then. So if you wanted to start going into some.
Should we go GLT just because of the bounce it had? Was it Wednesday?
Yeah, I mean, to be honest, I think I had just covered GLT, so I don't
Yeah,
have much to
same.
add. Um, so just more. I think I had clicked it just because I was wondering if there's anything else to go on.
Yeah,
I saw the chart had pulled back a little bit, so I'm not
yeah.
entirely convinced that they know exactly how much this is worth because it's strange. Usually, when there's a spinoff or something like that, you kind of have an idea of what that's worth and what that will unlock for the company. Um, I imagine knowing them that they're probably going to try and push some of that debt off onto this company as well.
I saw for the
Uh,
week it was up 70% now, and it had that jump for what was it, 105 or something in a
yeah, it
day?
was over 100. I don't remember exactly what it got up to, but it was high.
Yeah,
But like I said, it's a historically old. I mean, this company's been around for forever. They provide pretty basic paper supplies to a lot of different things, and historically this had traded so much higher. It's just this Ukrainian war has really kind of hurt their market. They had a big um, they generated a lot of their sales through there. So I was following this one on the basis that I thought if there was news of that war ever coming to an end, obviously there'd be a lot of rebuilding in Ukraine because I'm sure that the country itself is probably pretty devastated at this point.
yeah.
But it's smart. I think when they get down in this position, I think it's management doing the right thing. They're burning through cash. Um, their debt is just keeps kind of going up. Um, it's just kind of a tough time for the company. And I don't know how long they can kind of stay at this. So to start possibly getting rid of some of their assets in order to just stay afloat, you're going to kind of have to see that. And I still wonder what this will do to generate for them. I just know last time I looked at them, I think it had gotten cheap enough where it made sense that this might possibly be an interesting investment.
Yeah. No, I think if it wasn't this week, it was the last one that both of us pulled it up. And I've been tracking it for a while in the tracker, and also been tempted to have an entry position there in the
Yeah,
past.
I think for me, it had just never gotten cheap enough, but
No,
it's that is due partly in 26 and most of it's in 29. So,
yeah,
um, obviously they're going to be around for a while. I think that's why I was interested in them because if the debt's not really due that soon, they have a ton of room and time to kind of figure things out.
yeah. But yeah, I guess maybe it's not so much more to say here now. I would have loved to be in there on that day, but
Yeah, right.
but so since I added in the tracker, which was 6th of August 2023, it's still down, almost 4% since that date. So
Right. So,
yeah,
yeah, no, I mean it's still got a ways to go. I've traded, kind of swung traded this before in the past, but it kept looking bleaker and bleaker every quarter. Every time they came out with earnings and whatnot, you can just kind of see that this one they lost a lot of the business here, and they're in a tough spot for sure.
yeah. You want to continue to the one in our intro video today, EMKR,
Yeah, let's pull up MCore.
because boats are very cool. I think
Both are sick.
you can drive them. They float.
Hopefully they float. Less cool if they don't float.
Most of them float, at least.
Well, actually, there's boats that, you know, you can get a sub. That'd be cool. Unless it's that one that you go check out the Titanic with.
I don't want to be in that one, but a submarine would be cruising around in a submarine. That's something I want to do actually.
Well, that would be
When
cool.
BNED works
you know.
out, are we gonna buy a submarine?
Yeah, I always said, you know, whenever I make it big, that my goal is going to go be to be a treasure hunter. So
Yeah.
we'll get the boat, and you know, we'll go start hunting for lost treasure from some
Yeah.
boats.
Okay. No,
Seems like
but
a reasonable
it
plan.
was in the intro video because of it was 40% down yesterday.
Yeah, well, I mean, the past 2 years have been ugly. Like there's no doubt about it. The share count is starting to really creep up now. It's
Yeah.
almost doubled in the past 10 years now because of this past 2 years, really.
Yeah.
Debt's creeping up. Um, Cash is pretty low right now historically for the business.
Yeah. Earnings negative. And you know, if you look at the chart, it's down there, you know.
Yeah, and historically, I found with MCOR is because of the way their stuff works, it's usually all contract based. So if they start to fall behind on some of their contracts or what, like, you know, if they're not getting rehired in order to provide this stuff for the aerospace and defense communities, they can substantially get hit.
Yeah. Which is a bit. Is anyone writing about these? Because
The last one's from 2022,
yeah, a
so
bit
it
odd.
looks like it's just kind of been hovering at the bottom and just had a big drop. Is this all-time lows?
No, but close to. Well, it was probably yesterday.
It's pretty
Hit the
low.
low.
Yeah.
I'm seeing in a
And
comment how disappointing. I thought this would be the quarter of the turnaround would really show some success. The continued loss is painful. So that's a bit rough if people were expecting very different numbers here.
yeah, I'm having a hard time thinking how you can kind of recover from this because it doesn't look good.
No. And we forgot to read the description, but they are dealing like parts and stuff for navigation systems for air defense and boats and stuff like that, right?
Yeah, and it looks like the market for that is slowly evaporating.
Yeah. And this happened, like this is nothing new that we see in the stuff we deal in. A 40% move down. That happens pretty often.
Yeah, and it's, you know, it's after these big sell-offs, that's usually when, you know, you and I tend to come in and start looking at these things as we're trying
Yeah,
to figure out what's left here.
yeah.
Um,
But
I feel like historically I've been able to find it's a little easier sometimes when I'm looking at these really bottom of the barrel companies to find some kind of a value I can assign to it because you're kind of looking at it from more of the liquidation aspect.
yeah, true. It would be interesting
Yeah,
to
just a tough
see.
narrative. I don't know if I really see much with MCOR right now.
No, I was gonna say like that is when we often get interested when you see these big drops. But this has stuff that I really don't like. You know, of course it can turn it around, but this looks a bit rough in my opinion.
Yeah, agreed.
I was just checking the owners.
If there is owners, they probably just sold out.
Yeah. And I was gonna say it's gonna be interesting to see the next filings for Burry and people like that, because I haven't heard from him in a while.
Yeah, someone had commented in my last video that it's sometime next week. I think it's that all the funds are going to have to put out their report.
Next week?
Yeah, so we'll get to see what everybody's holding.
Yeah. Maybe we can go through on our stream, like just go quickly through his positions if there's something there.
Yeah, no, I definitely want to. I mean, I'll definitely look through what they got. See if there's
Yeah.
anything interesting there.
Yeah. No, okay. You want to do GTN then?
Yeah, it's great television. So this is right in the same realm that
SSP.
yeah.
Did you have anything else? Because I didn't pull up all your tickers.
Oh, it doesn't matter exactly which ones. I have a bunch of them listed, but doesn't really matter the order or what we go into. I'll probably try and get through all these, but like I said, I was able to find a lot this last week, so
Yeah.
I'll probably keep moving through things.
Just give me a ticker then, and I will pull it up here.
The next one I had is MNRO, which is a tire and automotive repair store in the U.S. I don't know if you have ever heard of them, but they're pretty.
What did you
They're,
say?
they're relatively big here. They're kind of all over the place.
What was the ticker?
MNRO.
Oh yeah. And what did you
Which it
say?
looks like
What are they doing?
So they're operator of retail tire and automotive repair store in the United States. Company offers replacement tires and tire related services, undercar repair services, as well as a routine maintenance. And it's typically on passenger cars like trucks and vans. They provide some basic services such as brakes, mufflers, exhaust, steering, drivetrain, suspension, and wheel alignment. Um, so it's like your typical automotive restore that kind of does like all kinds of repairs. Um, they have a few different brands that they work underneath. So they've obviously bought some stuff. They got approximately about 1,300 company operated retail stores in 32 states. So that kind of covers it. If you've ever
Yeah.
been to any kind of basic auto store, it's kind of like how they are.
Okay.
Typically more based on like the tire and repair side.
I pulled them up now. I see some. There's been some insider buys recently.
Yeah,
Michael
looks like
Broderick.
the CEO has been purchasing.
Yeah. That's 32.
Yeah, what is this historically traded at? Because to me, it looks a little pricey. Oh, wow, this really got low. This got all the way down to $24.
Yeah. Also in October.
Yeah, everything was getting down, but they don't. Oh, they are pretty levered.
They are pretty. Yeah, they are pretty levered, and they also have the dividend.
I'm surprised they're paying such a high dividend right now.
Yeah.
Like for this kind of leverage, that doesn't seem sustainable to me.
No, I agree with that.
And then on top of that, they did share buybacks. Like it's just kind of a strange mix of things to do.
The short interest is 11%.
Yeah, because with that kind of debt level, how often? I mean, you're not going to be able to. You can't sustain that dividend.
But look at the earnings is in my data set since 2005 positive every year.
Yeah, no, I'm not saying it's not a decent business. I just I just think that level of leverage is pretty high. That really drags their book value down.
Yeah.
You know, I mean, if you're looking at actual net income, I mean, we're it's a pretty rough year for them currently, or last year was.
Yeah.
They've been, and on top of this, this is them. They've been selling parts of the business off too.
Oh yeah, I see it. Yeah.
So if they hadn't sold these off the last 2 years, I think they'd actually be negative.
But revenue is still climbing though in that period.
It climbed, but I had last year at only 12, so it went back down.
Okay, we have a little bit of different numbers there then.
Yeah, mine's from 12/31 of 2023.
Yeah, Sam, I have 1.5 almost.
Gotcha. So yeah, mine's starting to go down now.
Okay.
Not
No,
saying
but
mine's right over yours. I'd have to double check
no,
with
it's
like
just
Yahoo or something.
for people watching. Sometimes we see this that it's not identical match in our numbers. But they do generate cash, and how's the margins? Margins a bit down.
Yeah, that part doesn't bode well, to be honest.
And that dividend is high, right?
I mean, it's nothing crazy, but it seems high in the fact that their debt level's where it is, unless that's all operating leases.
Yeah, let's check it. It shouldn't be.
I mean, even I imagine a part of it is, but I don't know, a big
Almost,
part of it is actually.
almost 40. Yeah, it is actually a big part.
All right, well that makes me
They have some Class C convertible preferred stock.
yeah, and it looks like they have a 5-year, $600 million revolving credit facility. Um, and it looks like they have about $94 million outstanding. So yeah,
Yeah.
they actually aren't as levered as it looks.
No. And that was for the short term also, right? Just lease.
Yeah. So
Could be
they're
more
not too
interesting.
bad off.
No. Have you checked the seeking?
No, not yet. I was just going through a little bit more on this. Still looking through my numbers here, but
There's a few articles, but not a lot of interest. There's one guy who's saying they used to be known for brakes maintenance. Now it seems they want a larger slice of the tire market. Maybe they are switching the model a bit.
yeah, I mean, when I think of MNRO, I do think of tires, but
Yeah.
if they're going to try and focus more on that, maybe there's better margins in that for their business, so that's why they're
Yeah.
starting to push for that.
I'm just pulling up investor presentation.
Okay. Yeah, this guy reasonably valued him around $29. I got like $27, so mine's a little more conservative, but either way.
Yeah.
I would just say it's a little expensive right now is one of my issues I see.
Yeah. What do you see as the high end, like 40, around 40 or what?
If I was gonna be extremely generous, I could see this get up to 50.
Yeah. Yeah, I see it has in the past, like 55 is the 52-week high.
Yeah, I mean, above 50, I can't really see too much value there. And honestly, that's discounting a lot. They're spending a lot on their leases. I mean, that's
Yeah.
definitely a big cut into the business, but they do generate cash flow still, no matter what. So um, I'm not to say that that leverage isn't worth its while because
Yeah.
otherwise they would be generating all this money if it wasn't worth it.
If you look at the, like before it broke like 40 in July last year, it
Hmm.
seemed to be it seems to be a floor around 40 historically since the pandemic.
Gotcha. Yeah, no, my bigger concern too is the margins. It looks like the margins over time have
Yeah,
really kind of
I saw
it's
that.
kind of really been getting worse as they've been acquiring stuff.
Yeah, and if the guy, if it's correct that they have tried to shift to tires, uh, I have here Q3 full year 24 key highlights: product and service category performance, batteries flat, brakes -1%, service -3%, front end shocks -5%, alignments -5%, and tires -9%.
Yeah, so I wonder if
Have you used these?
as they keep acquiring more and more stores, if they're starting to get into areas where the stores aren't as profitable, like some of the stores they're buying aren't like the best stores, so it's going to start to drive down those and make it look worse.
Yeah.
And it's one thing to raise your top line, but if your bottom line's not following suit, then do the revenues really benefit you much?
Yeah. They are talking about in the
I-
presentation that they are looking for other businesses to acquire, but in the last 2 years they have sold acquisition, sold their assets.
Well, I'm wondering too if that's if the idea for the longest time was to acquire all these stores, and now as the margins are starting to get crunched, like okay, maybe this isn't like the best option always, and start to sell off some of those underperforming stores.
Yeah. Spent
All right, then.
29
But
million in principal payments for financing leases.
yeah,
27 million in dividends.
I mean, I'm actually okay in their position. I thought the debt was a lot higher, but it's really not. So if they're not
Yeah.
paying a ton into interest, then that the debt's really not that bad. Like their debt ratio, even like it says right there, is only at 0.5 times, which is pretty low. So um, it's really just more the leases. Which I mean, you got if that's how you're owning the stores, you don't actually own it and you're leasing it. That is what it is.
Yeah. What is this? Can you see my screen?
Yeah, watching.
What is this one?
Um, I imagine that's when they sell off, um, the stores.
Okay.
Because divestitures just mean when you're like, getting rid of something.
Okay. Yeah, and a short interest. Do you think it's higher because people look at it as a very levered or what?
Maybe just from a quick look on a book value, it might look like it's a little expensive, but that's why I said, the book value is one thing, but if they're able to run the business highly levered, and I mean, they're paying a dividend out, they're buying back shares, it looks like.
Yeah.
Now granted, they are selling off parts of the business, like you just said with the divestitures, but, I don't necessarily think that's a bad thing. I think they're doing okay. My bigger thing is just, I just wish it was cheaper. Like right now, it looks like it's being run okay. It's just not super cheap.
Yeah. Closer to 20 maybe.
You're talking for valuation?
Yeah, just like where it gets interesting for our entry or to look at it again.
Yeah, no, I agree. Like around, I would say just under 20 is where I would start to become interested.
Yeah.
Like 18 bucks would be like ideal.
Yeah.
I doubt it will ever get that cheap, but we can
But I
hope.
like it when, like initially, we thought it was more depth than it really is here, and I kind of like when we stumble upon stuff like that.
Yeah, no, I agree. But the actual, like, if you combine their operating leases with their actual other long-term liabilities, it's really not that bad.
Yeah. I
So
feel like
we'll see.
the Michael Broderick. Is that guy famous?
I know that name.
Yeah, that's what I was. Oh, because it's a actor.
Yeah, but haven't we looked at something else that guy owns, not just for this
That's
company?
what I was thinking when I saw it, but I don't remember.
Hang on, let me see if I can find him specifically. No, he's just under insiders.
Oh,
No, that's all it says. It's just that I feel like I've looked this guy up for something else though.
Advanced Auto Parts.
Oh, that's why. Okay.
Yeah.
What's it say about AAP?
Uh, he was EVP merchandising and store operations support at Advanced Auto Parts.
Gotcha. Okay. I was gonna say, and AAP's on my like watch list to watch. What actually, now that you say that, I wonder what that's doing. I haven't looked at that in a minute.
Yeah. But he bought in now in February. Would be interesting to just 160,000.
Yeah, it's really crazy how much Advanced Auto Parts has dropped off here.
Oh. Which one was that? AAP?
Yeah, AAP is Advanced Auto. Like their chart, they were like worth like $200, and now they're down to like, well, they climbed back up a little bit, but they got all the way down to like $50, which to me is that $50 is cheap to me.
I've seen them a bit in the Daily Movers.
Yeah, they don't typically pop up on mine that much, but I know that business. I shop there,
Yeah.
pretty
Okay.
often, so I know that business decently.
Do you have another one?
Um, yeah, like I said, I got a bunch. I'll probably do one more, and then I'll probably start to hang up the towel. But
Yeah, sounds good.
the next one I got is OI. It's a glass manufacturer.
So OI Glass.
Yep. Looks like they have two segments, one America, one in Europe. They produce glass containers for alcoholic beverages, usually beer, spirits, or wine. Sometimes they'll do soft drinks, teas, juices, and even pharmaceuticals. Um, they basically sell their containers to some of the bigger names like Anheuser-Busch, Brown-Forman, Coca-Cola, Heineken, Coors, Nestle, Pepsi. So a lot of the they're one of the big producers for glass for a lot of those companies. So that bodes
All right.
well.
I have them. I have them up here in a second.
Yeah, you're good. Just at a quick look, they paid a dividend a little bit, but now they took that off only for a few years. They actually were able to pay one. Cash flow is pretty good.
Yeah. What did you
They have a
say
lot
about
of
the
debt.
dividend? Because I have that it stopped last year.
Yeah, no, I was just saying that they paid it for a few years. It looked like it stopped, so it looks like
Yeah.
it's been a while since they got the dividend back up. So
And a big buyback from 22 to 23.
um I mean I got about there I got up there down like 1 million shares.
I have from 159 to 154. Remember, we have had that bit different there in the past.
Yeah, I don't know. Is yours diluted shares? Is that what the difference was between mine and yours? Or was mine diluted and yours
I
isn't?
think we checked it, and it was mine that was a
One of the
bit
two.
off because of it pulled it from the wrong, not the wrong, but it pulled it just like you said, the diluted things. How much do you have then?
For like what they're worth.
No share count.
My share count right now is 155. I only have it from 156 to 155, but I had 157 in 2021. And
Okay.
you know, historically it's gotten all the way up. In 2017 they had 163 million shares. So they have definitely decreased share count a little bit. But you know, it's interesting. Book value's been growing. Um,
Yeah.
they've generated earnings decently, historically pretty good.
Yeah.
Cash flow from operations was good. In 2022, they saw a real struggle, but that's probably just because of the lack of people buying out, you know, this kind of stuff.
Yeah, because if you ignore that year, it's pretty good on the cash generation, operating and free cash flow.
Yeah, and it looks like this last year they spent a ton on CapEx. So wonder
Yeah.
why. I just want to look in there. I'm gonna start going into their debt to figure out what's going on with that.
$160 in short term.
Yes, they have a lot of notes and stuff that are due, it looks like.
How does this work though? Are you in the same can you see my screen?
Yeah, I can see.
Is this here the total they borrowed or?
Yeah, that's all added up. So they have a term loan and then they have all those senior notes. So the term loan's through like a bank or whatnot, or some kind of entity that funds them. Well, meanwhile, the notes are actual like bonds that are out there.
Yeah, okay.
And that's usually the interest as well as the principal amount.
Yeah.
I mean, they have some financial leases, but otherwise, I mean, there is a lot of debt. I mean, the one good thing is it's kind of structured throughout and over time.
Yeah.
But you could see like the ones that are bought more recently are at a much higher interest rate. So,
Yeah.
but they do have a revolving term. So you know, they have a lot of cash on hand. So it's not like the debt is ever like an immediate concern. It's covered pretty well.
Yeah. They have
So
sold
you know,
some
I have
assets
it's
since.
actually Looks like it's actually a decently run business. It's more just it just looks a little expensive to me, kind of at this price.
Yeah.
I'd like to see some kind of pullback here.
It seems like they have sold assets every year, like since the pandemic.
Yeah, I'm not sure exactly what they're selling there each time.
But that has generated some cash for them.
Let's go to seeking, see if anyone's talking about it over here. Investment doctor says it's a cash flow monster in disguise.
All right. I like that.
Says they're on the verge of commissioning a new plant. Had a weaker third quarter. I'd be curious to see what he thinks that plant is going to generate.
He's talking about put options.
Yeah, he's saying he'd like to see him reduce that debt by a little bit. I kind of agree with that. I think that would greatly benefit the company.
Yeah.
Yeah, he's trying to do like a strategy with his puts in order to kind of just cover the fact that he thinks it's probably going to slowly creep up from here.
Yeah. He also talked about how the bonds for 27 are attractive. Max is asking us, where is the factory of OI in Europe? I'm sure we can figure that out.
Well, I think it's a little more complicated than that because if you look at just the description of it, it's got distribution facilities. The United States used to import glass containers from its business in Mexico has approximately 69 plants in 19 countries.
Okay.
So it's got a lot all over the place.
Yeah. Yeah, so I guess they're just going to talk about the European market as a whole then. Which according to some people are to blame, right? Europe.
Yep, it's all your guys' fault.
I'm going to take a while before I get past that.
It was a low blow.
Yeah. Here I am trying to watch the stream and enjoy myself, and then you just get smacked in the face.
Out of nowhere.
Yeah. No, but I agree with this. Needs to be a bit cheaper. But it has a few things, right? And what do you think about
Yeah,
if you
no,
look at the chart? Because it's not far away from the 52-week low.
No, you know me, I'm just trying to look for that margin of safety. But the margin of safety can get improved through things like this, like a new plant, the fact they do have stable free cash flow. I'm kind of surprised actually it's had quite this pullback, but I guess they're just kind of waiting as if they had someone in the comments brought this up on Seeking Alpha is like, they just really haven't done much to kind of stand out, in terms of returning value to shareholders, like because they're kind of saddled with his debt and they don't really pay out much in dividends. Like, yeah, they've bought some shares back, but it's not anything crazy.
No.
Their cash position keeps growing. Like what are you doing with all this cash on your books?
Yeah. And I just
Like you got
noticed that
720, you could pay that debt way down, or you could,
yeah,
historically the debt is sorted down. It's better last year. They took more on last year. I don't know what they keep doing with these bonds.
I saw the retained earnings is down from 22 to 23 to I get 0.
I get, yeah, that's what I'm saying. Like they haven't done much in terms to help out shareholders.
Yeah.
So I don't know. I feel like I kind of agree with it. What that guy was saying is that like what's in it for shareholders on this one? What are
Yeah.
they doing to impress shareholders?
Yeah.
I just want to see what those bonds are actually trading at. I'm sure they're trading decently.
I see
Oh, of
the
course, when I
insider
just typed in
ownership is
OI,
sorry?
I typed in OI and it brings up every company out there. Thanks, Finra.
104, yeah.
What an efficient model. I
I
honestly, I
hope
can't even find them.
I hope the Finra guys are watching the stream because they
I'm
get to hear
disappointed.
it here.
This used to be a lot easier.
Yeah, but honestly, you love the last site, like the old version, right?
Yeah, the last version was super easy. I feel
So
like ever
quick
since they
and
changed it, it's just
yeah, it was great.
like
And by the way,
if
I
you're
have
looking through bonds, I can see why this style is great. But if you're looking at to use the bonds as a proxy for value, like this is
yeah,
terrible.
yeah.
You should be able to have the old view at least.
I reached out to them and they were not interesting. They replied me. I had a conversation with them, but they were not very keen to listen to me.
Well, that sounds like a bunch of
That
D-bags.
is the story of my life.
All right. Well, yeah, besides the fact that I think they just need to get themselves in a little bit better of a position. I don't think there's too much more I'm gonna find here.
No,
I want to see more from management on this one. Like management is the one that has like this is actually a decent business. I think there's a good moat here. Like if they're the ones providing the bottles, like if they're doing it, they're doing it decently. Other companies aren't going to abandon you and go somewhere else. It's just in terms of being a business, they haven't done anything for shareholders.
yeah. And I saw the inside ownership is only 1%, so they are not exactly aligned with the shareholders either.
Yeah, they don't got no skin in the game here.
I just saw Max ask some questions on it. He asked the Europe question because glass factory is very energy intensive, and for example, Germany has an energy problem. And he's saying many companies are leaving with energy intensive business models like aluminum production, chemistry, and so on.
Yeah, that's part of the things when you argue that, you want to go super green, but then you lose all these businesses and like we still need products like aluminum, we still need products, like glass. So, um they do say if you look at the picture from that last Seeking Alpha article, if you pull up where they're talking about their new magma at the Greenfield in Bowling, Kentucky, they said this is like a showcase plant. And one of the things they comment on is its sustainability. It's biofuel capable, it has a recycling ecosystem, gas oxy combustion. So they're talking about there is things that they're doing to make sure that it has a very neutral carbon footprint. Um, so, well, that it sounds like it's a much more efficient version of doing what they're doing. Yeah, that
Yeah,
one, if you look at the bottom right, it comments on sustainability right there.
yeah.
So,
I don't know if
yeah,
you can see.
maybe Europe's not the the favorite market for this kind of thing. But if they are building plants now that are much more efficient and more zero carbon, maybe they could push into that market a little bit easier.
Yeah. No, but I feel like we have done a lot today.
Yeah, we'll see. We'll see. I mean, like, yeah, I agree. And some of these are interesting. I think these guys, if they could figure out the debt and stop paying so much in interest rates on all these things, I think they could be in better shape. Like, honestly, this is like a good company if like maybe if you're like a bondholder, but for
Yeah.
shareholders, it's not too great.
No, that was what the guy was saying in the article too. Like he found the
Yeah.
bonds a bit more attractive.
Yeah, everyone's kind of saying the same thing actually.
Yeah. All right.
But nonetheless, I'm surprised I hadn't pulled that up in a little bit.
Yeah. I don't think I have either. It was not on my database here.
It was in my database, but I hadn't pulled it up since I think like 2022 it said.
Yeah.
So all right, man. Well, I think I'm gonna call it here.
Yeah. Sounds good. This coming week we are back to the normal days, right?
Yeah, you're good with doing Thursday. I'll do Tuesday again.
Yeah. Just for everyone watching us, I don't know if this is correct, but I think we have had some people watching the entire time today. So thanks for paying attention to us and yeah, tuning in. And thanks, Max, for all the questions.
Yeah, we appreciate it. We appreciate the comments. And that's the thing too, Max. We appreciate it not only for that, but you know, sometimes we're going through things quick, and whether I touch on it or not, it might be because I'm skipping over it because I'm not concerned. But it also sometimes I just forget to check certain things. You know, we're looking at so much and trying to keep track of so much that sometimes I just like overlook something. So when you kind of point out or ask a question, it kind of forces me to hop back in and look at something I might not have. So I do appreciate that.
Yeah. And the next one will be on Tuesday then, and with you, Dane. And
Correct.
hopefully we will see some development in the stuff we are. Yeah, we like if you have watched the streams for a couple of weeks now, you have seen probably us switching focus a little bit to narrow down a bit on a couple of tickers. But we love to also still pull in things from the daily movers and always try to look for new things. So we're not going to stop with that, but it's no secret now that we are focusing a bit more on BNED and maybe also for my in my case ALTO.
Yeah, but you know, just because I'm not in ALTO right now doesn't mean it's not interesting right here. I think I'm whether for better or worse, I'm just kind of I want to see this next report. I just want to make sure management starts to get back on our side, and even if I have to pay a little bit as it starts, if let's say everything is successful and we I have to watch them climb back up, I'm okay with kind of being on the later side of that and getting it a little bit higher than I normally would.
Yeah, and I think there's a great opportunity for management in ALTO now to give the market some confidence in them again. They need to deliver, straight out deliver now. And if this Q4 is bad, I I don't want to think about it.
Yeah.
Max is saying, I learned so much in your streams, even though I watched all the Roaring Kitty streams. So thank you. Yeah, thanks, Max. We are happy to hear that. That's the whole purpose that we even started with this. So we really appreciate the comments. And you help us, like Dane said, you help us learn also by asking questions. So it's perfect.
Yeah, and just remember, Max, too. I mean, you're gonna be one of the OGs. You know, the stream is slowly growing. We're getting more and more viewers. We're getting more and more people interested, and
Yeah.
you know, we've said the same thing. It's gonna take a few successes for people to start to become more interested in the stream because people want to see
Yeah.
results. So as the strategy, which we started finding great success last year in the strategy, but you know we weren't able to show anybody. No one's seen what we did. So this year will be different because this year you're going to see us go through the year and how things turn out. And if it remains successful, then you know well obviously more and more people will tune in and
Yeah.
kind of solidify the results.
Yeah. Hopefully. And yeah, I think also let us know, Max, and everyone else watching, like if we tend to land about like a couple of hours on the streams, like the lengthwise, if it's okay or not, if it's too long or too short. We want some feedback on the things, but I don't think we have done it on purpose, Dane, to land between like 2 hours. It's just how it has become, right?
Yeah, well, I also think too, like, you know, you can look at this stuff for so long and then you kind of need to like break and digest what you went through. So,
Yeah.
you know, I find that I can really sit and do some positive work for 2 hours, sometimes three. After that, I definitely need a break. Some days I'm tired, you know, too, especially if it's just late and I'm just tired. So then maybe I'll only go for an hour and a half, or if I'm busy doing something. But
Yeah.
definitely always try and at least shoot for that hour and a half mark, and if not more.
Yeah. Good. Max saying he's staying tuned, so I guess we see you on Tuesday then, Max. Nice to hear.
All right, Max, we'll see you then, man. Thank you,
All
everybody
right.
else watching.
Thank you, everyone, and we see you on Tuesday. Have a good weekend. The Super Bowl tomorrow, right?
Yeah, we'll see what happens.
Yeah.
Big game.
All right. See ya.
All right, TJ.